To all the happy investors, I can understand that how much excited we are to just get to that point where we can start doing value investing, where we can just learn about every single term and we can just figure out which company is best for long term and which company can just evolve 500 and 1000% and can give me so much amount of benefit and profits in return. I welcome you all, and let me remind you one thing. Let me just remind you one thing, that what we have learned yet from all the two videos and to all the new viewers and to all the new aspirants who are here to learn something about value investing and to learn all the terms of stock market, let us just go rewind what terms we have just studied yet in the previous two videos. We have went through the market capitalization, then we have studied about EPS, that is earning per share. Then we have taught about EPS PE ratio. What is PE ratio? Price divided by earning per share. Then we have learned about the enterprise value. Then we learned about book value. Then we proceeded to P by B ratio, that is price to book value. And then we studied about which sectors we have to ponder upon when we are studying about PB ratio. Then we have studied about the platforms, that which are the perfect platforms which all the investors and all the people who are earning good amount of money in the market, which platforms do they use to do the stock analysis. And after all of these studies, now we are here in this Stock 3 Prime video. Yes, very good morning to you all. My name is Shubham Bisht and I welcome you all happy investors to this amazing platform of YouTube named as Happiness Prime, this Stock 3 Prime video where we are going to learn about dividends. Yes, which companies give higher dividends and which companies gives lesser dividends, and how can we judge a company is going good or it is much better to invest according to the dividends. And then we will learn about the face value. What is a face value, how important it is to learn, and what is share premium and what is share price. And then we will go towards our third factor which we are going to learn in this video, which is promoter holding, that which companies are having higher promoter holdings, what and why the RBI banks limits the banks to have higher promoter holdings, and what does 0% promoter holding means. So in this many terms which we are going to study about in this Stock 3 Prime video, so you have to be ready with your notes and you have to be very attentive while listening. All of these three terms are very interesting. Dividends is one of the most important, and people have written 400 and 800 pages books on dividends, so it is going to be very exciting. So let's not waste any time, and I'm not wasting your time. We are just here to learn and to just give our family what we have dreamt for them. Let's start with the first term, which is dividends. What is a dividend? Which companies give dividends? You might have seen about a company giving 4% or 8% dividends. What is a dividend? Let's study about the definition first. A company annual profit, whenever a company makes an annual yearly profit, a percentage of that annual yearly profit company used to distribute amongst all the shareholders. A percentage of company's annual yearly profit company used to distribute amongst all the shareholders, so each shareholder gets amount as a good deed that they made a right decision to invest in a company, in that particular company. So whenever a company have an excessive profit, see, when can it be a situation that company can give something? That is only a possibility when there are 2 3 factors which you have to listen very carefully. Let's take an example of Coal India. Coal India Limited is giving approximately 8% of dividends. Now, how can Coal India can give so much higher percentage of dividends? That is 8% of its annual yearly profit. It is just distributing amongst all the shareholders. So there might be multiple factors. First factor which takes a very big place, that company is having a monopoly in the market. Company do not have any competitors. Secondly, company do not need to launch new products every single year to stay or to compete in the market, because it is a monopoly. They don't have any competitors. So they don't need to advertise their brand, they don't need to market their brand, they don't need higher sales force, much developers to increase their sales. They don't need to increase their sales. They are having enough profit, they are having enough brand name, and they are having enough monopoly that they are the only one in the market. So they are not having any competitors in near future. So there is not going to be any incident where they need a plenty of cash in a near future. That is why these companies decides to give higher dividend yields. So these are one of the examples. Now second case, that let's take an example of InfoEdge. InfoEdge is having multiple acquisitions, and InfoEdge is giving approximately 0.83 percentage of dividend yields. Now what does this mean? That InfoEdge is needing surplus amount of funds for its marketing, for its advertisements, for increasing the sales force, to increase the sales in the company. They need lots of developers and employees in the company. They need to market their brand because there are many other competitors of there in the market for InfoEdge. So all those companies which are having high competition in the market, and they need to increase the profit every single year, they, rather than distributing that extra surplus amount of funds in the distributors, in the shareholders, what they do is they use all of that amount to increase their business strategies and to just invest in their own firm to increase the business overall. So these are the two major factors. And in after this live example which I'm going to show you, I'm going to tell you this one more thing which is very important about dividends.
Let us take live example of few of the companies and let's take a look at dividend yields of these companies. As we had a conversation about the Coal India, so let's check out Coal India's dividend yield. Right now you can see dividend yield of Coal India Limited is 8.15 percentage. The share price is 147 rupees and number of shares is 616 cr. Yeah, so this is one of the highest dividend yield company is giving because they are a monopoly in the market. They don't need any marketing strategies or any new products in the market to just evolve aggressively. They don't need such kind of strategies. They're already a monopoly in the market. That is why they can give such high. So see, they are distributing 8 percentage of their annual yearly profit. That is a lot more amount. So the next company which we can see is InfoEdge. Let us see InfoEdge India Limited. Here you can see dividend yield is 0.13 percentage. 0.13 percentage of their annually yearly growth InfoEdge is giving to the consumers, to the shareholders. So this is very less percentage, but company needs a lot of amount, lot of profits it is spending. If you check in the P&L ratio, here you can see the company's net sales is 1272 cr, and here company is having 864 cr expenditures. So company needs to spend on advertising, on new market products, on new strategies, new business strategies. They have to reinvest their profit flow. That is why they cannot distribute a higher percentage of their profit amongst the shareholders. Let us see one more company, that is Cadila Healthcare Limited. This company is dealing in pharmaceuticals and drugs. So here you can see Cadila is also distributing 0.56 percentage of dividend yield, and you already know the reason. Let us go in the peers section. Here you can see Cipla is a good competitor, Dr. Reddy's Lab is a good competitor, Divi's Lab, Sun Pharma Industries is one of the biggest competitors, and or Aurobindo Pharma and Lupin and Torrent Pharma. These all companies are competing with Cadila Healthcare. So Cadila needs marketing strategies. Cadila needs to give discounts. Cadila needs to improve their product quality and improve the manufacturing units so they can stand in the market. That is why Cadila is not giving higher dividend yields. So I think now you understand the concept of dividend yields and how to measure it amongst different companies and what to see while investing and studying the dividend yield concept.
So now we just saw the live example of dividend yields of various companies. Now I need to tell you two major things about dividend yields. That when company is giving high dividend yields doesn't mean that it is a very nice company to invest in. You have to check the profit growth. It can happen that the company is declining in the profit growth, but still company is giving high dividend yields because company is not seeing any wide profitable range or any growth in near future. In near future, companies not having any big plans to invest in something very nice strategy. So that can be the reason that companies just distributing all of the money which is having, that is bigger portion, just like 7%, 9% of their annual yearly profit to all the shareholders, because it is not having that kind of bigger mentality. And second reason can be that if the company is giving low dividend yields, that doesn't mean company is not good. That doesn't mean company is not making profit. It might happen that company is making so much profit and company is seeing, or company have so much ideas and new marketing strategies in mind, that in the near future company is seeing many different opportunities and many ways to grow. That is why company is saving money to invest in the near future. So that can be also a good option. And one big thing which you have to remember here, one big thing which many of you have this one thing in mind, that if the company is giving good dividend yield and the company is making high profit, like gradually increasing the profit over the years, then definitely that is a very good company. And on this basis you can also just take your stock analysis ahead to that particular company and see all of the remaining ratios which we are going to discuss in the next few videos also. So that is one of the good factor which gives you a positive intention towards one company. So let's move on to the second factor which we are going to discuss, that is face value. Face value is one of the amazing concepts which you have to listen very carefully, and I'm going to just tell you with a very nice example so you get to learn it very easily. Let's say an example that Mr. Shubham is going to launch a company which is an XYZ, let's say an XYZ company, and Mr. Shubham has 1 lakh rupees to start with. So Mr. Shubham can issue 10,000 shares of 10 rupees face value, or Mr. Shubham can issue 50,000 shares of 2 rupees face value, or Mr. Shubham can issue 1 lakh shares of 1 rupees face value. So face value is just to denote that in how many parts the company's shares is divided. So let's take an example that if the company is issuing 10,000 shares and company needs to go public, if the company needs funding and company wants to launch its initial public offering, IPO. So let's say an example that Mr. Shubham have issued 10,000 shares worth 10 rupees face value. So total is 1 lakh rupees. So now Shubham have issued 10,000 shares. Now if Shubham needs equity, Shubham needs funds for his company, so I need to go public and I need to launch my IPO, that is initial public offering. So I can sell a few of my shares, a percentage of my shares at a higher price. I bought it at 10 rupees face value and I can sell my share at 250 or 450 according to the market ranges and according to my particular situation in the market. I can give these shares to all the public. That is, if I sell the share right at the time of IPO launch, if my share price is 450 rupees, then what is the share premium? The difference between the share price at the time of IPO launch minus the face value is known as share premium. So this is the most important thing which you wanted to learn, and this is very confusing. Like many people find the face value term very confusing. So if you just rewind what I just explained in this 2 minutes video, you are going to just get yourself clear. And once you write down these things, it is going to be very clear. So let's see a live example of face value.
The website which you are watching right now, it is one of our blog websites, and here we used to write stock blogs. So here you can see the face value, and we are going to read more about the face value just with a live example. Here we just went through an example, so let's just understand this in detail. Whenever a company is started legally, it issues number of shares. The price at which company issues those shares is known as face value. As we just gave an example, let's take another example so you can understand this very easily and very conveniently. Here Mr. Z issued 1 lakh shares for his XYZ company at the time of launching. Most of the companies assign this value as 10 rupees to make it easy for calculations. Now if Mr. Z wants to raise money from IPO, that is initial public offering, then Mr. Z would need to sell some of shares to the public. When he will do so, he can increase the price of each share by any value according to the market conditions. Whatever position he stands on, he can just increase the share price by any value. Let's say he sell for 299 rupees. In that case, the difference between the share price at the time of IPO launch minus the share face value, that is called the share premium. Here you can see the example of DMart, that at the time DMart priced the IPO, DMart IPO, the share price was 299 rupees and the face value was 10 rupees. So the share premium of DMart at the time of IPO launch was 289 rupees. So this was the live example of face value. Let's see some of the face values example in the companies. Here the Coal India's face value right now is 10 rupees. So if the company wants, company can also split their shares into 5 rupees and also 2 rupees and also 1 rupees, but face value cannot be lesser than 1 rupees. You have to just ponder this one thing. This is a very important fact, that face value can never be less than 1 rupees. It can be 10 rupees, it can be 5 rupees, it can be 2 rupees, or it can be 1 rupees, not less than 1. Here Info Edge Limited face value is 10 rupees. Cadila Healthcare face value, you can see here it is 1 rupees. Yeah, so number of shares Cadila is having 102.37 CR. Now you can see dividends, and now we are going to learn more about the promoter holding.
So we just went through the live example of face value and share premium. So let's move on to the third term, which is very important, that is promoter holdings. What is promoter holdings? See, every company is having promoters, and if promoters are increasing their holdings in the company, that means that promoters see something good in the company. They believe in their own company, they believe in the vision and mission of the company. So that is very nice factor if the promoters are increasing their share value, increasing their number of shares over the years. And there might be the case that promoter holding is above 40%, then the company is one of the good companies. You can say that if the promoter holdings is above 40%, above 60%, then it is a very good signal. But there is also an exception. Many companies can do a very better scam, just a visionary illusion, that if the promoter holding is 82 or 90 percentage, but the pledging percentage is more than 40, 50, 60 percentage. What does that mean? That promoters and all the company owners have taken so much loan and borrowed so much money from the people to get that much amount of shares. So having very high promoter holdings and having very high pledging percentage is one of the worst factors which you can look into and save your money while investing. And one of the other factors, that sometimes you can see that promoter holding is 0 percentage. What does this 0 percentage means? That is company, one of the best example of these are ITC Limited. This cigarette tobacco company is having 0 percentage promoter holdings. That means it is professionally managed company. That is, there is no solo owner of these kind of companies. Many group of companies are completely running this company. So that is professionally managed company. And so this was the basic of promoter holdings. And apart from that, you might also see DIIs and FIIs also investing in some of the companies. That is domestic institutional investors and foreign institutional investors. That is also one of the nice factors, that if DIIs and FIIs and publics are having higher percentage of shares in some particular companies, that means that it is one of the nice companies. But you have to look out for pledging percentage, because pledging is never a good idea. Pledging is one of, you can say, companies borrowing so much money to just increase the promoter holdings. That is not a good idea. And one other factors which you have to think, that if the company is selling, if the company is just selling more and more shares and more equity which they have, the shares which they have, then it is a very bad factor which you can just judge, that if the company is releasing their shares, that means the company is not looking any good things in future, and it is not looking any good opportunities in future. So let's take a live example of promoter holdings.
Let's go through some live example of promoter holdings. Yeah, promoter holdings. Let's see first Info Edge India Limited. Here you can click on shareholdings, and here you can see promoter percentage, that is 38.41. Here you can see foreign institutional investors have 39% of holdings in this company, in Info Edge. Then you can click on again shareholdings for 38, and you can see over the time company is just increasing slightly. Company have sold few of its shares, because it was 38.47 percentage and then it was 38.41. So company is gradually selling their number of shares, so that is not a good indication. But yeah, that is limited. 38% is a quite good percentage. Let's see something else, that is Cadila Healthcare. Let's see the shareholdings of Cadila. 74.88 percentage promoter holdings. That is very nice though. So here this is, you can see the constant number, that is companies promoters have a big vision, they believe in their company, they are having so much trust in the company, they haven't even sold one single share and one single promoter holding. So it is very nice ratio. Here DIIs are also investing, public investors are also investing, FIIs, that is foreign institutional investors, are also investing in the Cadila Healthcare. Let's see one of the other companies, that is ITC Share Limited. Here you can see ITC Limited, which we were talking about. Here the shareholding is 0%, because it is a professionally managed company. Yeah, here you can see DII 42.5% domestic institutional investors and 12.79% foreign institutional investors are there in the company. So a group of companies are running ITC right now. There is no solo owner of the ITC. So this is how you can take help from the promoter holdings.
So in this video, you got to learn everything about dividend yields. Yes, dividend yields, promoter holdings, and face value. In the next video series, we are going to learn more and more about these terms, and don't lose your patience. Very soon you are going to learn about everything, and you will definitely be able to do value investing, and you can invest each and every penny that you have saved over the years, over the months, and do lots of earnings and profits. So stay tuned, and just remember this one thing, that your dreams are your dreams. You are going to make your family proud, you are going to make yourself proud, and you will become financially rich, financially free one day. Just believe and keep the hard work on, keep studying from all of these videos, and you are going to learn about the value investing. And I assure you that after going through all of these videos, you will be a very nice, good, and valuable investor. Have fun, stay tuned, keep learning, stay happy, stay safe, keep hustling.